I want to show you guys a couple of setups that I took on the NASDAQ futures today. Today is January the 14th. Now, was scalping a little bit today, kind of playing a little bit of different style, right? Um, Let me kind of explain why. Here's where I'm at right now. So where I'm at on a couple of Top Step XFA accounts, which are funded accounts, they're already eligible for a payout in terms of what I like to make dollar wise before I take out a payout. All I'm really trying to do right now is just stack a couple more winning days and kind of build a balance up for when after I take this payout on these two particular accounts, there's a little bit of a cushion. So I'm kind of being a little bit more patient. I'm looking at different time frames and I'm kind of just taking trades that feel right. Not necessarily so many trades off the open. Here's the thing, guys. The more I personally trade off the open, the first 5, 15 minutes, I tend to it just does, it does no good for my mental because I feel like I put so much emphasis on trying to determine or decipher where the market's going. And yeah, even if I make money on those particular setups, I just feel like I'm mentally spent and it makes the rest of the trading day lethargic for me. So let me show you guys what I've got going on. Kind of staying a little bit more patient off the open, kind of waiting for, that 30-minute mark, 15-minute mark to kind of play out, see some structure, flip around different time frames between the 1 minute and the 5 minute, correlate that with a 30 minute, so forth and so forth. So what I'm looking at here, what you guys are looking at is a 1 minute time frame. The purple line is the 20 SMA. So you guys pretty much always know that I will run the 20 SMA on almost every chart that I look at. I use it as a trend indicator, right? I want to stay with the trend or I want to catch those trend reversals. So that's how I use it. Now, this morning, if we look at this, everything, my charts are all back in Pacific Standard Time because I'm in California. So I'm just going to read the times out to you in Pacific Standard Time. If you kind of look at what was going on here at around 8:30, right? We lost the 20 period moving average, we reclaimed it, we chopped around, but we failed to really break the previous swing high, right? Where's my drawing tool? So right here, this is what I'm talking about. We broke the 20 SMA. This is a swing high. We kind of closed back over, we came back down, we closed back over, but like we really failed to take out any prior high. So automatically I'm thinking pressure's down, right? That's my thought process. And then you can see we kind of break down here to the downside and we put in this little bit of a flag pattern and then we put in this low. Okay, now here's where I was looking to take my trade. Right here in the middle, I've had a level on my chart since Sunday. Every Sunday I'll do chart work and I'll look at a macro time frame. I'll start looking at the daily chart. I'll look at the 4 hour chart and I'll get some bigger areas of supply or demand. And those are going to be key areas for me all week. Okay. Until we get out of that entire range, they're going to be key levels. So I had a level at 20,855. And that's exactly where this little bit of a downtrend came, right? Right here. That flag pattern breakdown came and it literally stopped right there at my support. Because if we were trading over my key level, it is going to be support. Now, once we closed below it, you can see we started to bounce and we had just a lot of problems here. And it started to create this bigger flag pattern that I was looking at on the 1 minute time frame. Now here's where I entered, and let me kind of share something with you. I shared this with the members on the call today, but I got in here on the first initial breakdown. So you can see once we kind of put in this low and then we chopped back up into my range, I drew a flat top here. That's what you see with the, I drew this like resistance level here. And I was noticing us kind of bounce and bounce and bounce and bounce. And when we couldn't close over that area, that flat top, I was really interested is if we break to the downside, I want to be 100% short. So I got in here on a little bit heavy size for a funded account, for a 50K funded account. For me, again, everyone's different. And I got put in immediate drawdown, right? So at this point in time, I got in on this move. I was up about $300 and then it immediately went to break even and it started to bounce. Now, what I was trying to tell the folks on the call today is I've got to stay in the trade. Why? Because the feelings of, oh shit, right? is only related to the size that you're playing. Like the example that I said was, if I was trading one micro contract, I would have been down like $30, right? I wouldn't have felt anything. But because I was playing a lot bigger size, when it started to bounce against me, I was down around $300, $400. Okay. All in all, I was comfortable with that amount of risk. And truthfully speaking, as long as we did not close over that 20 SMA, or we did not close over that, flat top that I drew here, right? This resistance. As long as those two things didn't happen, I had to just bite down on my cheeks, hold the bottom of my chair, and just wait. And lo and behold, we came back down. Okay. We came back down. Why did my drawing tool go so small? We came back down. We took out the low, and it was on this candle where I just sold out, right? So as soon as we put in a new low, I sold somewhere like in here. And it was about an $800 trade. And that's all realistically I was looking for. Now, I probably missed out on a good $200, $300 more if I would have rode it to all the way down. But you never know how much it's going to go down. How many times have you taken a trade where you get into a move, it goes down, and then it just snaps back up, right? I don't really like that, especially when I'm playing a 1 minute time frame. It's kind of hard to, get my stop loss from here, and then as soon as it breaks, kind of move it down, because the chances of you getting stopped out are high, and then it goes in your favor, right? So I typically kind of leave my stop loss on these 1 minute time frames originally where it's at until we close, right? Until we close below the whole formation. And in this case, I sold out on this candle, so there was no time for me to even move a stop loss and see if it was going to go lower. I was just looking for the quick scalp. That was a 1 minute time frame, kind of a flag pattern, just a little flag breakdown. The next one was here. We kind of set up the same pattern. You can see here we kind of came down, we put in this little bit of a higher low. It started to really bounce, right? And once we closed over the 20 SMA, I kind of got a little hesitant in terms of thinking it was going to work out. But I looked to the left of the chart. We're still below that prior swing high. And then lo and behold, not only did it break the flag pattern, but it actually set up a 20 SMA 1 minute chart as well, right? Or 1 minute pattern as well. So here's my close below the 20 SMA. Here's the breakdown below that flag. So I quickly just got in on the confirmation here and then just rode it for a little bit of a scalp. This one I played a little bit lower size because I'd already made a good chunk on this trade. And I'm not trying to, if this does lose, I'm not trying to give it back. So what I did was I sized way down. I think I took about $100 on the trade. And then I wrapped it up. That was it. And what I was kind of explaining to everyone is like, guys, you don't need to sit here and go long or go short and then go long and then go short and go long and then go short and go long and go short and go long. You drive yourself nuts. Just kind of see the price action, see what's going on, and see if you can find one or two good trades. And if you can find one or two good trades that aligns with everything that you do, and you can put some risk behind it, and then you can also be comfortable with the drawdown or comfortable with a stop loss, then just fire away the trade, right? And let the trade do what the trade's going to do. And then if you win, walk away, right? You don't need to sit there and look for a million other trades. Again, go let everyone else trade 20, 30, 40, 50 times a day, right? I want you guys to be the trader who puts on a little bit of size on their trade. They catch a good 15, good 10, 15 point winner, good 5 point winner, but they've got some size behind it and they can just walk away and go live their life. With that being said, hope you guys enjoy the video. I know this is a little bit of a different type of way that I scalp. It's also something that I cover in Evolution Traders. Guys, when I jump on the calls, some days I'm going to play 20 SMA plays, some days I'm playing breakouts. Today, I just really felt like getting down and dirty with this 1 minute chart and kind of seeing the structure play out on a little bit more smaller details, and then taking some smaller scalps on some different types of setups to kind of nurse those funded accounts along that I have. So with that being said, make sure to like, comment, subscribe if you guys want to join the room. That link is down in the description box below. Also, Apex evaluations, if you guys need them, use code DAnthony at any time. It's going to give you the best available rate at the current time you enter in the code, and I'll catch you guys all in the room.